Chad, I'm going to mute you now, bro. Really
You hear
looking
me?
forward to meeting you. Yeah,
Oh,
Chad,
perfect. How's it going?
nice to meet you.
Nice to meet you as well.
So, to share your screen, there's a green box. If you just float your cursor around the drop-down menu and
Share,
it'll say share. Yeah,
continue, desktop one.
there we go.
Let's
There
see.
you go.
Okay, we got
Perfect,
you.
perfect, perfect.
I think you need a few more desktop icons.
Yeah, it looks like
You know,
my
I thought,
look. That looks like mine. I do the same thing. Does it take a while to start up your machine because
no,
of that?
I bought one of those $3,500 MacBooks that,
Oh, okay.
yeah, well, I mean, it was kind
You're
of,
living large, Chad. What can I say?
to be honest, it kind of went to the story of how shitty it honestly is. It's
All
not
right.
really
All
not the
right. All right. So I a tweet must have attracted me to something you put out on Twitter. I found you there.
best.
So I'm interested, Chad, as I asked, I've interviewed almost 1,000 traders over the years. I'm always interested in what the catalyst was that brought them into the industry, what they were doing before, and kind of give us your trading journey story into from point A to where you are now.
Sure. I think I have a story kind of similar to a lot of traders. I was going through a time of change. I was actually fired from a job, and I heard about forex trading, and I started to dive into it a little bit. And this was back in 2015, so it was early on, and I was pretty young. I'm 30 now, so
Okay.
talking 4 years ago or so. And honestly, I remember my mom, she actually ended up giving me $7,000 cash, to get me started.
Oh
And
yeah, my mom said, "Honey, get a real job." So
oh,
that's pretty. Anyway, that's supportive. So
yeah.
what job were you fired from before you got your
So
mom
I
gave
was
you
in the
money?
I was in the real estate industry,
Okay.
and I would go through what happened, but it's all about political correctness, and
Okay.
so
All right.
and
Anyway,
so anyway.
hell of a bull market there still raging. Do you think, since you were in it, or do you think there could be a repeat? Everyone's saying that, what happened in '08 could never happen again. Do you think so?
I think it's all going to happen on a bigger scale now, to be honest. I think what's happened is we've just put a band-aid on the big problem. Quantitative easement or easing is obviously an experiment. We haven't seen too much data from it. We get to see maybe Japan at most, with what they're doing, and we haven't seen anything positive through there as far
So
as
you
I'm.
think real estate values can drop from wherever they peak and maybe we're
Yes.
around it now, 30, 40, 50% like they did in '08, '09?
Um, I think it could be around there. I was looking at some data the other day, and I found out that our debt in the housing industry is actually higher than it was back in '07 and '08. So, that's something that people don't really talk about a whole lot.
Yeah.
And to me, that's pretty wild.
Yeah, it's hard to, and so people are probably using, because here in California, we've actually taken out the '08 highs and values. So
Yeah.
with rates here, they're probably using their equity as an ATM machine again,
Yeah. Well,
if
do you
that's what you're saying.
notice? I don't know if you noticed, but something that was very interesting to me is rates have been dropping, but I noticed the housing market's actually dropping in sales. So I think what's happening is the actual housing prices are just still way too high. Everybody's going, why am I buying this high right now?
Yeah.
So even with the interest rate drops, if we're not seeing the housing market pick up right now, I mean, how low does it have to drop till we actually see that pick up again? And
Okay.
that's where I think we've reached the top of the market.
Maybe the dollar is part of the story too, a deflationary signal. So I see you have this wedge here, and
Yeah, up on the
why don't you
DXY.
tell us what you're looking for here?
Okay, so I'll kind of go through my chart and charting styles before we go into it. I kind of color code my levels over here. So I have weekly levels in gold, daily levels in red, green, And then the gold up here is my weekly resistance. Blue down here is my weekly support. Green.
What are the levels based on? Fibs or?
So what I base my levels on is I actually learned something through a gentleman named ICT. I don't know, some users or traders out there.
Michael. I've interviewed Michael.
Yeah, he's an interesting guy. I honestly don't follow too much, but one thing I figured out from him is his supports and resistances are just bar none like I've ever seen. And so I use his order block technique, which basically takes the end of the trend on the flip candle right here. If you look, you're going to take your the whole entire body of the candle and you're going to outlayer that. And that right there is your order block.
You know, Michael has spawned quite a few traders.
Yeah, I mean, the guy has...
Do you know Saeed as well?
I actually don't. I don't.
Okay, yeah, okay. All right, so you came up with this method based upon Michael's technique, and I've seen, just like Michael, no indicators. So you trade naked? Pretty much.
So on this DXY, I just don't have any indicators on because
I was going to tell you, if you do, to keep your shades drawn.
Sure. Yeah. You never know.
All right.
But over here, so I'm pretty simple though with the indicators. So we'll go to ES right here and see what futures are doing. So I use a modified RSI tool who I grabbed off of Twitter. There's a Twitter profile named Storm, and he has amazing indicators that he scripts himself. And so this one is based off of divergences, and that's one of the techniques I use the most is divergences.
Oh yeah, me too.
Okay, so perfect. This would be something interesting to look for. I'll kind of pop this on so you can see what it's called. I can't exactly pronounce that. It's like a German. Anyway, it does fantastic for divergences. I've never used a tool that can spot them. I've had a lot of traders say they didn't spot the divergence, and I'll show them it, and then I'd say honestly it's about 75% of the time the divergence works out as long as I'm actually using the divergence properly. So anyway, looking here at ES before we have the open real quick here in 20 minutes, it's looking like we're hitting a good resistance right here. I believe if we move over this spot real quick, I think we're going to hit new highs. With everything happening with Trump's impeachment and everything like that, it's looking like maybe things are settling down. We hit a big support level right here, and then we dropped a little bit lower. So I'm still not convinced until we actually reach over this level right here that we will actually make new highs. So I'm not making.
Do you have a count for a new high? Do you measure objectives and targets? A new high is a pretty general statement.
Absolutely. So when I do, I will use my fib targets because we don't know where we're going here. We're going into
uncharted waters.
Yeah, price discovery. It's one of my favorite things, actually. And honestly, the easiest way I've ever been able to judge where something is going to go are from fibs. So, I'll flip around my...
Let me guess that what you really love about trading is that you don't have to wait for an escrow to close to get in and out.
Oh, absolutely.
I couldn't. I did it a few times. I can't. I need to be able to, get out at the market on things. Anyway.
Yeah, you need to be able to just close when you need to. Sometimes.
Yeah. Anyway, dollar weakening. I know I probably distracted you, Chad.
Sure.
You were showing a dollar chart up there. Were you negative up there?
So kind of what I was kind of looking at before I was listening to the other gentleman before you, and I noticed the 102 target's pretty a common thing that I've been hearing.
Yeah,
and so I do have that target as well. That is one of my fib points up here.
That's why everyone has it, because people use fibs.
Yeah, so it's kind of that whole idea that if everybody's using, is it really going to happen? I tend to just kind of shy away from the common, what everybody's thinking. To me, I'm not going to use this wedge as the deciding factor of where it goes because I don't use patterns on a non-tradable asset. It's
What
just
do you mean untradable asset?
well, I mean the dollar currency index, I mean, is just based on weighted baskets of currencies. So I'm not actually trading the DXY.
Okay, you're trading euro and other dollar pairs, not
Yes,
Dixie.
exactly.
Okay.
Exactly.
Why do you
So,
follow it then?
because I'm looking at the actual weighted strength of it. It's just, to me, an average value of how it's doing in the highest weighted.
Okay, why the Dixie instead of some of the other trade weighted that aren't as heavily biased or weighted towards euro?
I actually don't have an answer for that.
Okay,
I've just
well,
kind of always used the DXY.
okay,
So kind of just a personal thing that I have going for me.
all right. Well, okay, I'm like that too, a creature of habit.
Yeah, that's kind of
Good and bad.
yeah, absolutely. And it's one
All
thing
right.
with trading I've learned is, sometimes you got to break those habits.
Okay. All right. So what are you thinking here? You're just neutral the dollar because it's just in the middle of this formation,
I
or
mean, I'm
what
kind
do you
of
think?
so here's my whole idea with DXY. I mean, we have a stronger USD right now due to stronger data and perceived lower risks. The trade war is seeming to ease up a little bit. Impeachment is possibly a thing. It sounds like that's a positive thing. Um, I'm not sure how to take that right now, but I mean, the devaluation of the global currencies has also helped spike the USD.
Okay, so your answer is I don't know.
Yeah. I mean,
Okay,
I
all
play
right.
level by level.
Let me coach you so that you
Sure,
can save a lot of energy
sure,
because you're a young guy,
sure.
and it's probably hard for you to say that.
Yeah, absolutely.
I don't know, because if you say I don't know, it makes you think like you're stupid.
No,
How come you don't know? You know
see,
what? It's wisdom to
I would
say
never
I
say
don't know.
that because I think trading is a moment by moment interaction. I
Okay,
don't think
but a lot of people have a hard time with I don't know and I was wrong.
I think that's the worst thing that you could possibly have as a trader. If you can't admit you're wrong, and if you can't admit
Okay.
to changing your bias in a minute decision.
Yeah. Well, here's one for you then. WD Gann. If you don't learn how to change your mind, you won't have any change left.
Absolutely.
Okay, so I'm just saying, I got from you, you were uncomfortable saying I don't know because when people are presenting a chart to me and they start talking about all the fundamentals and cross currents, it
Mhm.
tells me, you could save time and say, I don't know.
Yeah, you could, but I think there's two ways you can say I don't know because I think there's two directions that you always have. So you can
Okay.
limit the possibilities of what's going to happen. So if I say I don't know what's going to happen, I can say, okay, if it breaks above here, I have X I can do. If it breaks below here, I have X I can do. And what I have are my already supports and resistances where I can target what's going to happen after that.
Okay.
So I think that's the
Okay,
best way to look
great.
at an I don't know
You
situation.
pass the test. So it's neutral until price action does something.
Absolutely. I'm
Got
definitely
you.
not taking any trades before it actually does something.
Okay. So you were on the S&Ps after that, and you said you needed a level to be taken out for a shot to new highs.
Sure, absolutely. So we're looking right here. We're just going to look at ES mini futures real quick since we're not open just yet. We're looking around right here. The 29.95 level is a pretty big area, and we'll go on the daily and show you where my resistances are. So as you can tell, it's getting hit right here with that wick. And I believe right here, there's a big volume profile, as you can see, that we need to pass. But once we get up here, it's pretty much smooth sailing.
Is that market profiles or what, Chad? What is that on the right-hand side?
So it's a VPVR. It's the volume profile. It's going to show you.
It's cool.
Yeah, it's definitely one of the best trading tools I use. Really, what I use when I trade are support and resistances. And if I'm going to use an indicator, it's going to be confluent with those. I don't really
Okay.
use anything else.
All right. So tell me how to use this as a trader.
Okay.
The longer the horizontal bar in white tells you that it was a heavier volume area. It tells you where.
Perfect.
Is that it?
Perfect. But here's the thing. So as you move out, you're going to see it'll change, and it all deals with time. So if I have a wider range of time, then you're going to see where right here is a huge volume profile right here, right? But if I'm just looking at this area,
That's where it broke out at that 29, 30,
Yep.
40 area. Yeah. Okay.
Exactly.
All
So
right.
this is just confluence with everything I do. So I'll kind of go over real quick for anybody listening how I actually set up my charts. And what I actually do is I'll start from the weekly. And from every candle flip change on a trend change, I'll set my supports then my resistances, if there's anything. Obviously, we're in a little bit new charted territory over here.
Okay.
So I'll get those down. And then I'll go back into the market structure that's currently here, the most local market structure. And then I'll put in the daily support levels and resistance levels that I have. So I get really accurate in there. And that's how I set my charts up to begin with. And then I'll get the first run up that I actually see with a breakdown. I'll set my fib from here to the top. And that's basically how I set up my charts. And then from there, I really don't have to continuously look back and set new levels. Those levels are set. I'll go back and flip up the daily levels here and there just to make them more local, a little bit more accurate. But from there, I like to take things simple, because as far as I can explain, the more difficult you make trading, to the more difficult it really gets. I mean,
okay, so this resistance level that we're being rejected from actually this morning, if we get through it, how do you measure an upside target? You use fib extensions for that?
Yes, exactly. And so right up here, I need to flip that back around.
Where do you trade from, Chad?
I trade from Denver, Colorado right now.
Nice.
Also, I'm based out of Oregon as well. And my other kind of business is actually the hemp business right now.
Oh, okay.
Very interesting. If anybody wants to know a little bit about the pot business right now, I do have a little insight. So what's happening right now, I'll kind of give you guys a little insight, is that
do you trade the stocks, or you're just more interested in the growing or the distribution
I do
and the
both.
stores? You do both.
Because I'm wholesale. I go nationwide, and I kind of have a good insight of how businesses have structured themselves with this new hemp law that's happened.
Yeah.
It's a pretty big deal, honestly. It's a whole new commodity as far as I'm concerned, and
you're making good money doing that?
It kind of ridiculous money right now. So
wow.
Yeah, it's really good. It's going to get saturated. However, that's what happened with the THC market, and it's bound to happen. But we're kind of early in this game because everybody else is trying.
So more CBD oil and stuff like that.
Yeah, so CBD, hemp.
Yeah, it cures everything, doesn't it? CBD.
Apparently,
can I take CBD oil if I'm in a drawdown and I'll recapture all my capital?
Oh, if only we had that miracle cure.
I think I'd want to be a distributor for that.
I think you'd be richer than Jeff Bezos over here.
Anyway, yeah, you take some CBD oil and you're even. I think a few people would buy that. Okay.
I think more than a couple, but if you want to get in business after this, we'll talk about that. We'll figure it out.
Okay, buddy. Yeah.
Perfect.
I'm a product of the 60s and 70s.
Yeah. So then it's kind of crazy right now. We have
it is. I dreamed of the day it would be decriminalized like this. So it's pretty. I'm glad I lived to see it.
Yeah, absolutely.
Anyway, so I know that you wanted to address some fundamental stuff, that you have some views
Sure.
on the Fed and
I
what's
do.
going on there. And you know what? It's most people, I think even Jerome Powell is confused
Mm-hmm.
about what to do. A friend of mine, Peter Bookvar, said that the Fed is not data dependent; they're S&P dependent. So, tell me what you think is happening at the Fed and the divisions occurring at the Fed. Some wanted to be even go easier, and there were some saying we shouldn't have done anything at all. Tell me what Chad Del Rosario is thinking about the Fed now.
Okay, so I kind of have a little theme I had set for this entire thing, and I'll kind of go off the beginning, and it will lead into where I think things are at. So, where I think we're at, or we're at an end of a cycle, basically a paradigm shift. And Ray Dalio, I'm not sure if anybody's heard of him.
Sure. Yeah.
Sure. I don't know if you've read his paradigm shift paper that he just recently released, or not recently, but
I haven't, so you'll give us a cliff notes.
yeah, exactly.
Yeah.
And so this whole entire thing leads into where my macro perspective of trading is coming from is coming from this. And so every decade has its own distinctive characteristics. And at each end of every decade, most investors are expected the next decade to be pretty similar. And that adds a lot of complacency to the marketplace. And in fact, the subsequent decades are actually more opposite to similar than the preceding ones. And so that really results in movements that are pretty large and unexpected, and there's big shifts in wealth. And we can go through each decade, and in fact, I'm gonna touch on them, so that way, obviously, I won't talk through every one. I'm just gonna touch on ones, and there's going to be ones that the listeners will hear and they'll be like, oh, right, you're right, things do change every decade. And that's something I actually never thought about until I read this piece he wrote. And so every major asset class has had great decades and horrible decades as well. And if you invested all of your wealth into one of these asset classes during a decade, on the wrong decade, you probably would have almost lost all your money. And so that's why cycles matter. And so I'm going to kind of lead into this of, how from the 1920s, it started roaring. It was a boom to the bursting bubble. To the 1930s, it was the Depression. 1940s, we had war and post-war. 1950s, we had the post-war recovery. 1960s, we had the boom to the monetary bust. 1970s, we had low growth to high inflation, which is actually stagflation. In 1980s, we had high growth to falling inflation, which is actually disinflation. The 1990s was the bust to the bursting bubble, which is the dot-com era. I'm sure this is getting to the point where everybody knows everything, 97 to 2001, 2000 to 2010, that was roaring, from boom to bursting bubble, which, everybody knows the housing market. And then we get to here, where we're reflation, we're a shift into the new coming paradigm. Central banks have been lowering interest rates and doing quantitative easing, which is, experimental and still very questionable in my brain. And if anybody doesn't know what quantitative easing is, it's when the central bank purchases government securities or other securities like mortgage-backed securities, which are bundles of home loans, kind of packaged in a pretty little package that you can trade around. And this increases the money supply and encourages lending and investments. And so that's how we broke out of this mess we were in from 2007 up. And in my opinion, it's been unsustainable, and it's bloated the balance sheet full of junk bonds and all these other things. And recently, if anybody's listening to the meetings, they hinted at the expansion of the balance sheet, which reinvigorates quantitative easing. And so that brings us to the issue of where we're at with, we have a liquidity squeeze right now because of how things are moving. So we have the trade wars that are obviously the yuan was devaluated to offset tariffs, and they did that because exports will actually increase, and that they actually stopped importing so much into China because they saw this all happening. They realized they had to devaluate, offset these tariffs.
Who's they?
China did.
Okay, yeah. So the yuan going down in value. Okay, go ahead.
Yeah. So we have that happening, and it's created a ripple through. If you throw a rock through a lake, it's going to create ripples out, and everybody else has had to ease, and that's where we're at right now. Is we have the Fed easing, the ECB easing, the DOE easing, the BOJ easing. I mean, we have almost everybody's easing right now, and we have a really strong dollar, creating a really, really strong demand for the dollar. And then that's where we had this repo market thing happen. And it's been kind of floating around the financial Twitter, I've noticed a lot. And that's something that's really never been talked about, is the repo market. And it was attributed to, this mid-month jump to 8% was attributed to a confluence of events that knocked cash reserves out of their balance with the volume of securities on the balance sheets.
Yeah, they were saying it was, corporate tax day.
Yeah, exactly.
But it took $60 billion to stabilize it.
Yeah, it was a lot, and it's as far as I know, I'm pretty sure I just read they're still doing.
So is this the first crack of lightning into a liquidity crisis, the opposite of what we've had the last 13 years with easy money, that because of the dollar, we're going to have liquidity issues with market structure, and it's going to create liquidation of almost everything?
That is kind of where I'm going to. I mean, this is something I feel like not a lot of people are talking about. And
God, I read about this in the 70s. It's an old book called The Great Money Panic by Martin Weiss. And he talks about like T-bill rates going to 20%, not because the Fed's raising rates and there's a strong economy or strong inflation, just because there's a shortage of cash. So people, just like what we just saw a week or so ago, the market bidding for cash and rates go up, not because of any fundamental reason, just because there's not enough liquidity.
Exactly. And this is kind of a crazy situation for us to be in. And the reason we actually started talking, this kind of leads me back. So if you want to remember how we started talking, I had a comment about Bitcoin. And to be fair with all the listeners, I'm not the biggest crypto kind of guy. I actually made a good amount of money when the bull run happened, and I've had a decent time shorting it as well. But I actually do see a reason for Bitcoin, and it is weird that it decoupled recently from gold. I did notice a similar trend. I was actually trading Bitcoin and gold somewhat similar. In fact, I thought gold was leading for a little bit, and I messed up with this Bitcoin short recently because I saw gold moving up, and then we were at a support level.
Yeah, correlations work until they don't. I know you've only been doing this about 4 or 5 years, but it can throw you off. Actually, when you're trading, and I don't say stop looking at correlations,
sure,
but the best thing to do is treat every instrument like it's its own unique life or organism. And at times it detaches, and at times it connects to relationships. But trade the chart that you're trading.
Absolutely.
But anyway, you're not the only guy, Chad, that follows the correlation, and it disconnects and misleads you. So, but don't give up watching them, because I like that you have a holistic outlook for markets, and you're looking at big picture stuff instead of someone that comes in here and just shows a 60-minute chart. You know what I mean? You got to use your telescope, bro.
I agree. I think that's a big issue with a lot of traders I see them too much into the intraday, whereas I'm more of a macro. I mean, I have a lot to do. So that's a
Yeah.
trade macro. So I'm not like constantly staring at the screen, but I think that's the best way to do it. If you're going to have a big picture outlook, you need to have that before you even have a general 60-minute chart up. You need to figure out where you're going. Unless you're scalping, I don't see that being the best trading style.
Okay, so we're starting to run a little short of time. What's your outlook for Bitcoin after this big sharp decline?
I'm looking at it right now, and honestly, it does not look too hot. I actually thought it was going to look a lot better. This looks like, we were going over volume profiles real quick, and if you can see right here, big volume profile, 300-day EMAs right here as well. So
maybe
honestly,
7,000, 6,000 for a buy point.
Yeah, so right here's my big levels I'm gonna hit. It's either gonna be 7,667.50 right here, or we're hitting the sixes right here. And I'll tell you, since we're running low on time, if it drops below 6, that's when I'm worried. That to me is a big psychological support. It's what, in my opinion, brought us to the new bull run. If you can call this a bull run.
Under 6, we won't see 18K again. If it holds above 6, we could.
I don't think so. And I think there's one thing to be said about this backs coming in, is that if you looked at the volume on there, it's pretty pathetic.
Yeah.
You're showing that institutions aren't really buying. So
and if there's a liquidity crisis, why wouldn't crypto get caught up in that? People will sell the kitchen sink to raise cash.
Yeah, so I agree with that as well. I think there's going to be an issue with that. I think real quick with the Bitcoin, I think we just have political factors that can add to that. And
the government doesn't like it. They want their own.
Yeah, exactly.
Or something.
And if you notice, all the governments are talking about stable coins now. So that could be, who says Bitcoin had to be the cryptocurrency? They could create their own crypto, which it seems like they're doing.
Yeah. Okay, well, I hope you enjoyed yourself.
I did. I appreciate it.
I enjoyed meeting you, and I think you're going to have a great career in this. You're a thinker, and you know what else you are now? You're now my new trading warrior brother.
All right. I like to hear that. I appreciate you having me on.
Yeah, so the best way for people to follow you, Chad, was what? Twitter? I notice on your Twitter, your link is to AOL.
Yeah, so I kind of made this whole thing. This has just been kind of a fun way to share the trading journey, and I have noticed, my following group getting a little bit bigger. So when I harvest all this CBD and my life settles down to the businesses, I think I'll start up a little trading group, but I won't charge. I don't believe in the charging aspects.
Okay, well, I disagree.
All right, well, it's a capitalist society,
it's also, why are people, and I'll end it with this, why are people willing to pay, which I recently have, their CPA, their lawyer, their doctor,
true,
but not traders?
Fair enough.
Okay, so I rest my case, and because we're all specialists, and it takes specialized knowledge, and I can't remember the last time I went to the doctor, and he said, "Oh, that's on the house, Dale." Yeah. So anyway, just food for thought, and Chad, great meeting you. Thank you so much for hanging out with me today and edifying F.A.C.E.
Absolutely, I appreciate it, and let me know if there's another opportunity.
I promise there will be.
Okay.
And let's stay in touch on Twitter.
Absolutely.
Talk about some other things too. So that's a wrap, everybody. Earlier in the session, I talked about the dollar potentially weakening, and as you can see, we're getting that. Swiss came off. We were talking about it up here, and euro continued to squeeze after they took out all the stops. So this is the example of the stop hunt. Everyone's stop was elected under this low, under 26. We went to 22. They're out, and they're going, hey, how come I'm still not long? Anyway, that's a wrap, everybody. Remember, don't just count your pips, count your blessings. and see everyone for TGIF. And there is a recorded version of the webinar. And also I want to remind you guys, this is the last few days for our promotional offer. So if you haven't acted yet, the window of opportunity is closing. So don't just count your pips, count your blessings. See everyone tomorrow. Adios. You're very welcome.